And what if you had an indicator capable of analyzing short, medium, and long-term structures simultaneously, transforming all of it into a single, easy-to-interpret oscillator? No need to manually mark dozens of swing highs and lows, and without relying solely on lagging moving averages. Well, today I'm going to show you the market structure oscillator from LuxAlgo, a tool that identifies real market structural changes and converts them into a momentum reading, trend strength, and possible reversals. If you like price action and market structure, this will take your analysis to the next level. The first thing we need to do is open up TradingView here and choose a chart so we can trade. I personally really like Forex pairs, but you are completely free to choose any asset you want, be it crypto, Forex, indices, or even stocks, whatever you prefer. Currently, I'm on the Euro USD, looking at the 5-minute chart. You can also use larger charts as well, however you prefer. To place the indicator on your chart, we will navigate to the indicators section, and there you'll search for the market structure oscillator. Just as I typed it, this option from LuxAlgo will appear. You just click on it and some of the options will come unchecked by default. So then, you come here to the settings and you're going to search and you're going to look down here for this particular tab. Normally this particular setting comes unchecked by default, so you'll need to go ahead and enable this specific option within the market structures on chart section, and then also activate this other option right here. And you can click OK. So how does the indicator work in practice? Its foundation is simple yet powerful. It automatically identifies swing highs and lows. Firstly, it locates the short-term swings, then utilizes these points to pinpoint medium-term swings, and ultimately the long-term swings. In other words, it establishes highs and lows with light, moderate, and very strong significance. It will also effectively display certain interesting elements directly on your screen, like choke and boss. The boss signifies trend continuation, occurring when the price surpasses a prior high or low, thereby confirming its robust strength. And the choke indicates a possible trend change when the current structure starts to fail. For example, the market was making higher highs and lows and suddenly it breaks a relevant low. This could signal a price reversal. Furthermore, it also includes an oscillator. All this structural data is normalized and transformed into an oscillator. This oscillator will show you trend strength, momentum, and possible overbought or oversold areas. When the oscillator rises sharply, buying pressure is increasing. When it falls sharply, selling pressure is gaining strength. It can also generate signals when crossing equilibrium levels. For example, you can observe that it features a central line, and upon crossing this line, it could signal a shift in the overall trend, or perhaps it's merely executing a brief pullback before resuming its original prevailing trajectory. It's also important to understand the colors. When the indicator is blue, it's showing an uptrend phase, and when it's yellow, it's a downtrend phase. And how can you actually use this indicator in practice? I'm going to show you exactly how I personally use it. But before we continue, many of you often ask me which broker I personally use to trade various markets like Forex, stocks, or even cryptocurrencies. And the answer is EXNESS. To me, it's easily the best and most comprehensive broker available on the market. If your broker ever annoyed you, you'll understand what I'm about to say. Many brokers have slow order execution. With EXNESS, execution is instant. Some brokers charge extremely high spreads. At EXNESS, the spreads and fees are incredibly low, among the absolute lowest you'll encounter in the market. Ever waited days to get a withdrawal? With EXNESS, the money arrives almost instantly. And best of all, you can adjust leverage almost infinitely as you like while managing your risk. So if your broker freezes, charges a lot, or takes forever to pay you, it's time for a change. The link here will be in the description, and as I mentioned, I personally consider it one of the very best brokers with the lowest fees in the entire market. I go here to indicators once more and then search for EMA. I add the exponential moving average and it's going to show up right here on my chart. I'm going to set its period here to 200, which is already the case for mine. Then, in the style section, I'll change its color to white and also slightly increase its thickness. And hit OK. Now what's my preference? For a sell, it's quite straightforward. I will wait for the price to be trading clearly below the white line, meaning the 200 period moving average. This action indicates a very strong downtrend. There will come a time when it must execute a pullback because price doesn't just continuously drop without making any adjustments. So it's going to make those corrections. There will be a point when it will ascend up to a certain level. And this will be designated within the indicator by these blue bars. Observe that the line which has been tracking along here needs to ascend above this central zone precisely as it did in this particular instance. It went up above, and sometimes it might even touch this overbought zone, but it's not strictly necessary for it to actually reach that point. We need it to enter this area, ensuring it doesn't drop below the moving average. The price must not rise above the moving average. So what exactly do we need next? We want to see this line reverse its direction and head downwards again. When the indicator line crosses the central equilibrium level here, pointing downwards once more, that's precisely when I'll execute my sell order. This is because the market has, in all likelihood, completed a temporary pullback and is now poised to revert to its predominant downward trend, which in this case is bearish. So I would place my sell order precisely on this specific candle here, as that's exactly where the indicator line reversed its direction, signaling a shift in momentum. So we are going to place it exactly at the closing of this candle right here. The stop loss always goes above the last high, in this instance around 0.12. Our target is then set twice that amount lower, at 0.24, and the price hit it right here. This signifies the completion of the pullback it had executed, now returning to its original bearish trend. Notice that in an uptrend it's the same thing, but in reverse. I have the price trading clearly above the white line, the 200 period moving average. There will come a moment when this price will have to make a pullback, taking a rest before it can return to its original trend. Indeed, it executed that pullback precisely at this point, and at the same time the previously blue line began to descend and cross beneath the central equilibrium zone. It crossed beneath the central zone and the price indeed reached this specific level. The instant I observe it reverse with this particular line ascending once more beyond the central zone, I gain a fresh indication that the price may have concluded its bearish pullback at this juncture and is now poised to resume its upward trend. So that exact situation unfolded right here, as you can see. And it ended up with this specific candle here crossing back above the central line once again, confirming its upward trajectory. Therefore, I will position my entry at this specific candle. My stop loss will be placed slightly beneath the most recent low, set at 0.04. The profit target will be twice that distance above at 0.08, and as you can observe, the price came right up to hit that level, securing our take profit on this upward movement. If you enjoy videos like this featuring accurate and useful indicators for your daily trading, make sure to subscribe to this channel. Don't forget, most people who watch end up not subscribing and miss out on valuable videos. One or the other of these indicators could end up changing your game forever in the financial market. So subscribe and turn on notifications. Leave a like too, that really helps me out and keeps me motivated to bring you new videos. Also, comment here with more indicators so I know you are interested in keeping up with the new videos. And remember, this is not financial advice and no indicator can guarantee profits. Always remember to use it as a complementary tool with your risk management strategy. If you liked it, leave a like, subscribe, and I'll see you in the next lesson.